The global economy is fundamentally different today than it was yesterday. The system of global trade anchored on the United States that Canada has relied on since the end of the Second World War, a system that, while not perfect, has helped to deliver prosperity for our country for decades, is over. Our old relationship of steadily deepening integration with the United States is over. The 80-year period when the United States embraced the mantle of global economic leadership, when it forged alliances rooted in trust and mutual respect, and championed the free and open exchange of goods and services.
Did a single policy decision just flip the global energy market upside down? Because something huge just happened, and it's shaking trade routes, jobs, and prices across continents. Canada, once a major gas supplier to the US, has shifted its focus. And Qatar? It's now pouring gas into Europe. Gas that used to head to American buyers is sailing across the Atlantic. This isn't some small adjustment. It's a tariff-driven pivot that's disrupting energy trade worldwide. The US once relied heavily on Canada, billions of dollars worth of gas imports every year. Qatar, too, used to supply plenty to American buyers. But now, Europe is getting the lion's share. New deals are being signed fast. Why the shift? US tariffs added costs to gas trades. That made exports less profitable. Quiet negotiations happened behind closed doors. And suddenly, the market changed overnight. Gas prices in the US are creeping toward $5. Jobs in the energy sector are wobbling. Europe's homes and factories, they're running on this redirected supply. And US buyers, they're scrambling for alternatives. From Canada's gas fields to Qatar's massive export plants, trade routes are being recharted. And at the center of it all, one key factor: profit. So why did Canada and Qatar pivot? Sure, tariffs played a big role, but there's more going on. Canada's changing direction. US tariffs slapped extra charges on Canadian gas exports, cutting into profits. So Canada looked for new buyers, and found them. A massive project in British Columbia now produces millions of tons of gas each year. Instead of sending it across the border to the US, most of it now ships overseas. Europe, places like Germany and the Netherlands, and Asia, Japan in particular, are now top buyers. And they're paying more than the US, where tariffs squeezed Canada's margins. Canada's pipelines have literally been reoriented. Ports are built for overseas exports, not cross-border trade. It's a strategic shift. Europe was desperate for fuel after losing other suppliers. They needed stability, and they could afford to pay for it. Canada's response? Focus on long-term, higher-paying markets. Now, the US still gets some gas from Canada, sure, but it's not the focus anymore. Europe signed multi-billion-dollar contracts, locking in supply for the long term. Canada chased the better deal, and it's working. So what about Qatar? Qatar's role in the global gas game is exploding. New production facilities are online, and they're pushing out gas faster than ever. Europe? That's the main target now. Germany has inked massive contracts. Italy followed. More countries are already in talks. Why? Qatar's gas is cheaper than US exports, especially with American tariffs driving prices up. And there's less trade friction. That matters a lot. Qatar isn't just meeting current demand. They're tying up Europe's markets with long-term deals, some stretching years ahead. Their plan is clear. Lead the global gas trade. And the numbers back it up. Qatar's fields are set to produce even more soon, possibly outpacing every rival in the game. They're not just selling fuel, they're building influence. So how is the US holding up? Not well. Gas exports to Europe are down, way down. Canada and Qatar have taken over that supply. American gas terminals, once operating at full capacity, are now running slower. Thousands of jobs are being lost in places like Texas. Gas prices at the pump are pushing toward $5 a gallon. Factories that rely on gas are paying more, and they're passing those costs on. Grocery bills, utility bills. Everything's rising. The US depended on Canada's steady flow and Qatar's surplus. But now those sources are locked into Europe. American buyers are left to fight in tougher, more expensive markets. So, what exactly triggered all this? Tariffs. US trade policies tried to shape the game, but they ended up pushing major suppliers away. Canada and Qatar found better deals elsewhere. And they moved fast. Tariffs didn't just increase costs, they redirected the entire flow of energy. And now, the US is stuck playing catch-up. Europe needed gas badly. They acted quickly. Secret negotiations led to billion-dollar contracts. Canada's exports to the US shrank dramatically, losing millions in value. Qatar's exports shifted decisively toward Europe, where they could earn more with fewer restrictions. Canada even retaliated with its own tariffs on US goods. The trade war went both ways. But this wasn't some fluke. It was a realignment, and it left the United States staring at a new energy reality. Europe, meanwhile, was quick to plug its energy gap. Hundreds of billions of cubic meters of lost supply were replaced by gas from Qatar and Canada. Germany now depends on Qatar. The Netherlands on Canada. And these aren't short-term deals. They're locked in for a decade or more. Of course, there are risks. Qatar's supply depends on global trade staying smooth. Canada's pipeline projects often face local opposition, but Europe had no time to wait. The US still sends some gas across the Atlantic, but it's more expensive and less reliable. Qatar and Canada offer better prices, steadier flow, and that's what buyers want. So how did these two step in so fast? Opportunity met preparation. Qatar already had the infrastructure. Canada ramped up quickly with major new terminals on its west coast. Both nations now have global reach, and they're cashing in. For Canada, the shift is bringing serious money. Gas deals with Europe and Asia are worth billions. Coastal towns are booming with new jobs, from pipeline crews to port workers. Asia's in the mix too. Japan's buying. Demand is rising. Canada's exports to the US fell off, but global trade more than made up the difference. This wasn't just reaction. It was a plan. Canada's building for long-term global trade. Their infrastructure isn't just aimed at US buyers anymore. It's targeting the whole world. Why the full shift? Tariffs made it profitable, and Canada seized the moment. Qatar's doing the same. They're now a cornerstone of Europe's energy future. Their gas could soon surpass every other supplier, and they're not stopping at fuel. Gas deals are opening doors to bigger trade opportunities, like shipping and infrastructure investments. Italy's talking billions in new trade. Japan and others in Asia are signing on. This isn't just energy, it's strategy. And Qatar's executing it fast. They're using cheap gas to win contracts and building long-term influence along the way. So, where does this leave America? On the outside looking in, gas exports to Europe are down. Canada and Qatar have filled the gaps. Jobs are being lost. Fuel is more expensive. And the US is hunting for new buyers. Asia could help. Maybe Japan or South Korea. But competition is stiff. And America's gas? It's just not as cheap. There is hope. New technology could lower drilling costs. Shale fields might ramp up. But scaling up takes time. Smaller deals with other countries might help. But again, they're more expensive than the old Canada rates. The US miscalculated. Tariffs meant to help ended up pushing supply away. And now, families pay more. Industry struggles. And America has to figure out its next move. Because gas isn't just energy. It's jobs. It's policy. It's leverage. Qatar and Canada rewrote the game. Now the US has to decide if it wants to catch up or get left behind. With that said, thanks for watching, and until next time.